Welcome to investorsidiots.com, the only e-newsletter that will make your money work for you. I'm your editor Arjun Partati speaking. This is a second video tutorial on equity research analysis where we take you through a live example of carrying out equity research on a company. The company under research is Tata Motors. This is the 29th series in the tutorials on equity investments where we have covered all aspects of company specific analysis and are now putting them into a live equity research analysis. In this tutorial, we'll take you through the Indian business outlook for Tata Motors. Part 5 of equity research analysis showed the contribution of India, JLR and subsidiaries of Tata Motors to the consolidated financials of the company. Indian business contributed to 24% of sales and around 9% of profits. In this tutorial, we will analyze the outlook for the Indian business. Slowdown seems to be visible in Tata Motors. The first quarter 2012-13 results for the Indian business of Tata Motors showed that commercial vehicles and passenger car sales volumes were down. Passenger car sales volume was down 10%. Exports were down on a global economic downturn. Margins were down, indicating tough business conditions, increased input costs, lack of pricing power, and high competition in the auto sector in India. The auto industry in India is going through a rough phase. We saw August 2012 passenger car sales down 19%. This is the lowest seen since 2009. Industry is going through a rough patch on the back of a weakening economy. GDP growth at below 6% levels, forecast at below 6% levels as against 2011-12 growth of 6.5%. You have the IIP Index of Industrial Production for April-July coming in at minus 0.1%. Inflation is staying sticky at around 7% levels, keeping interest rates high in the economy. Banks are unwilling to lower interest rates given their poor asset quality. And global economy seems to be going through a rough patch as well. And these are all hitting the domestic vehicle industry. So the growth for 2012-13 is forecast at below 10% levels. The industry body SIAM is looking to revise the forecast down. The commercial vehicle business of Tata Motors is looking weak. The market share has come down to 56.2% in the first quarter 2012-13, and this market share was actually over 60% in 2010-11. Competitors like Eicher Motors are eating into Tata Motors market share. Medium to heavy commercial vehicles down. Sales are down on weak economic and high interest rates. Light commercial vehicles is sustaining growth as the company is making efforts to boost small vehicle sales. Bus sales showed a good increase on increased demand. The company cut production in this quarter largely in line to keep inventories in line with the demand. The passenger car sale segment of the industry is also facing a tough time. Passenger car sales for Tata Motors fell on weak demand and increased competition. Nano growth was negligible, the small car growth. Indica is finding it tough in a highly competitive market. Indigos is facing high competition. Utility vehicle like Sumo and Safari are being hit by Mahindra products. Premium vehicles including Jaguar are selling well for the company. However, there's some light at the end of the tunnel. August 2012 sales for the company was better than the industry average. We saw Tata Motors record a total of 12% sales in August. The industry recorded a sales growth of less than 5%. Nano sales increased fivefold, that's largely on the back of a lower base. Car and utility vehicle sales were up 33%, and this was led by utility vehicles such as Sumo, Safari, Aria, and the Venture range of vehicles. The company is looking to address competition and try to grow faster than the industry. The festive season in October, starting September, October, could increase demand for vehicles and Tata's products. However, it would still not lend to a robust growth outlook for 2012-13. Now the question is whether the positive outlook for August sales will it sustain. So with this, we come to the end of this part of the tutorial on equity research analyst on Tata Motors. In the next tutorial, we will delve further into the Indian business of Tata Motors. The tutorial on equity investment subscription is 4,000 per annum, and you get all past content, which includes 29 of the previous content series on equity tutorial on equity investments. It's just 4,000 rupees per annum, and subscribers would be able to, by the end of this series on equity analysis, would be able to make sound investment decisions on stocks with a thorough understanding of the fundamentals of equity. The no nonsense pack offer for subscription is on. It's rupees 15,000 per year, and it includes all the content in the site. The no nonsense pack is for you to benefit not only for 1 year but throughout your lifetime, and you would find that 15,000 rupees you pay and subscription and renewals will more than make up in returns, as every investment decision will be based on sound knowledge. You can contact Nilima at info@investorsideas.com for any further queries. Thank you.